Well, welcome back for the afternoon session. All right, let's take a peek and see what happened during the lunch session. Is there anything we need to pay attention to? We did have news at 12 o'clock. Doesn't look like it did very much. There was a retracement, but looks like it's already rebounded from the levels that it pushed off of. Pretty much this breaker on the 1 minute. We saw it push off just before. We saw another retracement 3 times heading into lunch. Each time retraced, or I'm sorry, rejected off the level, pushed down towards what we thought was going to be a bearish breaker on a higher time frame. Never materialized, went down, tested off the previous day high. I thought it was going to break below and then retest, but it retested from above and that level held. And so now it looks like we're pushing towards that same breaker on the 1 minute. That was holding price just before lunch. So we'll see how it holds price now. Let's give it a few minutes to show itself and then we'll go from there. Let's check in the chat. We have TJ, Khaled, Splash, Crypto Queen, Young. Welcome. Welcome all. All right, Vivian. Welcome. Just want to see if we can reach up to 18,108 and see how price reacts if it gets there. Yep, Khaled, you're right. We have 1, 2, 3. We have 3 different retests in this area. All have been sent packing. And so now we'll see how this fourth retrace into the area, how this one does, and whether it also gets pushed down towards those lows. We have equal lows down at 18,076, and obviously the previous day high at 18,071. And we'll give another 5 minutes, and we'll move up to the higher time frame, and we'll see where we're seeing on the 5 and the 15 minutes. Let's shift over to our other view so we can take a look at the other indices as we start our session. Right, we see we're slightly bullish on Dow, equal on S&P, slightly bearish on Nasdaq, but anything can change over the next couple minutes because the range so far in these 7 minutes has been really small. So neither of the indices have shown what it wants to do this hour. Dollar also showing a small bearish range, but again, small range. Time frame that we'll be watching. Okay, so we had failure to make a new high after making a new low. We passed this fair value gap, also passed this fair value gap. On its way up, it traded through and closed above all of those. Still failed to make a new high. So let's see if it finds support here and actually does make that high, or if we see a further collapse and it starts going for the lows now. Thing is, until we pass below, we're still bullish. Right? If you see, we had this bullish move up. The protected low is here at the bottom of what could become a bearish breaker. That's the protected low. Even the sweep down, sweeping through the previous day high, did not sweep the protected low. So we're still showing bullish momentum, even though we're in the middle of a consolidation. You want to look at the range of where we are from low to high. 50% is at 18,092. 18,092 is 50%. And again, that was from this swing low at 18,062 all the way to the high. Okay, as of right now, it's just trading in between these two ranges here, and so there's not a whole lot to do unless you have a clear picture as to which direction you think price is going. I'm looking some other time frames to see if I notice anything. So far, I haven't discovered anything yet. I'll let you know if I do. Just got a couple more time frames to check. As we are approaching this 18,108, whether we get a close above that level. That's what it looked like. Do not like that fair value gap entry. Let's find one on a higher time frame. Okay, this one's nicer. Is what we want. Something out of here. All right, let's. Okay. We are on a lower time frame, so yeah, we'll sit there. We'll see what happens. Not a huge risk, but about 8 points. It looks like the continuation is not to be. That's fine. It's less than a 10-point risk there. Thought we had a switch back to bullish. The 1 minute was the only time frame it wasn't bullish. And I didn't wait. I didn't wait for the close above 108. I didn't wait for the close. I just got a pierce above. It didn't close. And that was me jumping the gun there. Yeah, all the other time frames are bullish. This 1 minute's the only one that's bearish, and I needed a close above 108 to switch back over to bullish on the 1 minute. I took it after it closed above the breaker, and so I figured that was enough, but it didn't close above market structure, which was the next move, which would have created it bullish. So my mistake for getting in early. Let me go back up to 5 minute. See, maybe this is where it'll find some support. All right. So right now we're showing bearish ES and NQ, and we're showing a bullish Dow, bearish dollar. All right. All the way back to lunchtime low. So this is going to be the lunch low down here at 0.67. And the lunch high is still at 108, the level we were looking at before. It took the lunchtime high, but it didn't close above. Now it's moving towards the lunchtime low. Okay, previous day high test once again, push through. Let's see now if it sweeps the lunchtime low, which is here. I'll mark it up. Right, lunch low looks like it's gone now. Okay. So now we got lunch high and lunch low have been traded too. Let's see if we do activate this breaker from earlier before lunch that we were looking at. Wait one more minute to see if the 3-minute closes below. Same with the 5-minute, closing in 1 minute. Looks like they may not give us an entry for this one, but that's fine. The 930 low. Where's the 930 low? Possibly. But that's the same as, if I'm not mistaken, down here. The New York low. Yeah, it's possible. Definitely. That's the last session low that's open. Call it the discount, you mean? I think he's saying discount. All right, so it's not coming back. We most likely will not will not see a retracement far enough to enter this trade. Let's see, did the 3-minute give anything? Nope, it didn't. Once it closed out and outside and confirmed, so the 2-minute delivered, but the 2-minute is not the time frame we were trading off of. However, it does look like the 2-minute also had the same size, same exact size breaker. So yeah, so it looks like the 2-minute was the entry point for this setup. Yeah. Let's go ahead and get rid of these limit orders. Just don't see us taking a setup. Even if it retraces, it won't be high probability any longer. Go back up to the 5-minute. Watch it from here. All right, New York low is up next at 18,007. Yeah, it looks like the retracement happened right when the Dow reached last week's high. Finally reached its high this hour. It didn't take it over lunch. It hadn't taken it prior to like the other two, and then it finally got it this hour. It looks like once that happened is when the sell-off happened. All right, all lows have now been taken. All lows. There are none remaining from the session. All right, let's now go and look and see if we can't find some other targets below. You know what? Let's shift this up just because there's a fair value gap here. You know what? I'll put them both in. Okay. Why did I call it a sippy? It's busy. There we go. 15-minute and 1 hour. No, the daily fair value gap is not created yet. It's not done. It won't be finished until today's candle closes. The next daily fair value gap is at 17,800. It's currently making one. If it gets all the way down to 896, then there won't be a fair value gap. I think that's what they're talking about. So on Friday, we hit one standard deviation and turned around. And today we hit 1.5 standard deviation and turned around. Okay. Good job, crypto. Halfway through your week already, Monday afternoon. It's still early. Not even 2 o'clock. Okay, finally we got the Dow trading bearish finally for the hour. Took quite a while because again it was still pushing higher until it reached its all-time high. Once it did that and eclipsed the all-time high, now we have had all three indices um, reestablish their all-time highs today. Once that occurred about 15 minutes ago, then we saw the big sell-off. Actually, more than 15 minutes ago. Let me break this down to a smaller time frame. Okay, yep. So it reached its all-time high right around 115 and then started to sell off. So yep. So about a half hour ago is when that occurred. Simultaneously, we saw S&P and Nasdaq start to sell off. And once they did so, we went and took out session lows from today. So now we are at all-time, well, not all-time, but we're at daily lows for now. And now we can see where price wants to settle and whether it reestablish itself and trades in the range it just left or whether it continues south. That's true. If you live in Philippines, you'd be done for the month. 2 minute breaker. Yeah, you're right. We could get a rejection right here from the midnight open now that it's trading below it. Right here on the 15 minute. If you went from here, then you'll get a trade below. $9.57. Yep, that is consequent encroachment of the 1 hour. Yeah, I just have it marked up here for the very top. This isn't CE. This is the very northern extremity, 967, and then 977 is on the 15-minute. Also a fair value gap there. Mm. Right now, we see price slowing down a bit. I'm going to drop down to the 5 minute, so we'll get a few more candles to look at. Yeah, same here. I don't trust it either. That bearish breaker, we didn't retrace into it, and since then we've pushed what about 75 points south. So yeah, I'm not interested in that breaker. It may work, but yeah, not for me. If anything, I'd take it maybe at consequent encroachments or at the previous day high. They would have to retest that. It could push right out of here and keep pushing south because the midnight open could hold price. All right, while we have some time, let's take a look at the other indices. All right, we can see just what happened to NQ once it finally decided that it wasn't going to hold that level. It wasn't going to push any higher. You could see the amount of energy that it used to push down. Sweeping lows. So it looks like we have a little S&T going on. Hmm. It's not even close. Yeah, this is not even close. We'll wait and see how this candle closes before we declare an SMT. All right, Fauci. Wait a minute, crypto. I thought you don't like 1 minute breakers. All right, so it looks like rejection off of half of the breaker, maybe. And we're back. We're back below it now. Okay. Yeah. Yep. Yeah. Yeah, you're right. Chasing post a 30% retraced. Okay. Yep, you're right about that. Sitting right here in the center at 1807.1. All right, 2 o'clock, 2:03 actually. 2:03. Just the calm before the storm. Is this just the consolidation before the next expansion? Hmm. Yeah, body's getting stuck at the midnight open. Who was that who mentioned that? It was Gavin. Yeah, Kansas City won again. So my boys fell up short for the third time in the last 12 years. Okay, let's see if it retests the midnight opening once again. In the last 20 minutes, we had the last three candles have all tested the midnight open, all closing below. Let's get rid of this so we can see better. There we go. Hmm. All right, so far this candle, it came right up and touched it, which is also the breaker. So it's the midnight open as well as the lower extremity of the breaker. And so far we're getting a rejection again. All right, if anyone's looking for short and you were looking for a silver bullet, there's fair value gaps for you on the 1 minute. There we are on the 2 minute. We're inside of one. 3 minute, just below it. 4 minute inside of one. Brother Free, I did not. I missed that move. I attempted a long at the top end up here, and then it was going down. I attempted to take this breaker south, but there was no retracement. So as glorious as it was, if you didn't get in the beginning, you just had to believe in it and just get in wherever, because it wasn't providing a lot of safe entries. Just look and see. I think I saw something on the 2-minute where there was an entry on the 2, but you can see none of the fair value gaps got traded back into. So it was great for those who caught it at the beginning, but after that, I don't see a safe entry. Going all the way down to the 1-minute. Yep. Yeah, this one here, I guess at 035. I guess you could have taken it down for another 30 points, but yeah, that's about the only one that I saw. But congratulations to you if you caught it down. It seems like you did. So you got 100. You got every single point that this move down delivered. You got in at the very top and out at the very bottom. Or you got 120 points in total for 10 contracts. Okay. All right. Well, if you caught the whole move, congrats. Call it good advice. Good advice. What were your other brother Free? What were your other indicators other than volume being high? What did you use to get in at roughly 107? You had to get in at 107 or so to get 110 points. All right, there's the new expansion leg after the consolidation. 15-minute BISI here, 1 hour BISI coming next at 967. Delta divergence. Okay, yeah, I'm not familiar with that, but okay. All right, thanks for sharing. Well, Crypto, you said you were going to jump into your demo, so yeah, you can go ahead. Otherwise, you can go in with your live account and see if you can add to it. Oh, ouch. Using 4 contracts on demo. Okay, got it. Yeah, CE of the hourly, you're looking at 950 something, so about another 10 points roughly. Let's see what's below that. Below that would be the levels from Friday. So you're looking at, okay, Friday's 9 o'clock open. So the New York low on Friday would be 875. Which is also roughly consequent encroachment of that fair value gap down to 875. Let's move these markers. We don't need them any longer. All right, we have the lows from Friday that were never swept. I don't believe so. Yep, that's why they're still there. Down at 850, so that's another 100 points if price wants to keep running that way. Yeah, you're right. There's nothing above and below. There's not a whole lot. Like I said, 875. So this New York low, but yeah, that's about it. almost 50%. Okay, needs a little further go. All right, another 20 seconds on this 5-minute candle, and then we'll see how the next one opens up. All right, looks like the dollar has found a little bit of footing and is now trading into a bearish fair value gap within a larger bullish one. So that's interesting setup there. Okay, so the last candle did close up, leaving a fairly large fair value gap there. We had a trade into it already, and so far a rejection. It's still early in the candle, but we have another 2.5 minutes remaining. And I just want to see how this candle plays out, whether it trades even deeper into the fair value gap or we go and start seeking those lower prices. All right, Crypto Queen, take care. We'll see you tomorrow. Great laughter. Yeah. Dow, if you're looking for something that moves fast, that's the one. All right, Queen. See you tomorrow. All right. So it did dig a little bit deeper, or at least it came back and closed inside of the fair value gap. It didn't really make a larger dent. It just closed inside as opposed to outside. So we'll see now what the next candle does. PJ, you're right. It only makes you more disciplined. Queen, don't worry about it. You're going to crush it. uh, that's a good way to do it. To have Topstep and Apex, just make sure that you're protected, just in case some shenanigans happen. Oh, did they? They gave him an extra down. Yeah, TJ, I drink like that too. I rarely drink these days. Drinking was a big part of my life in my 20s. Now, some minor piece. I'll drink if I go out with some other people, and I'll have one or two, and that's about it. Yeah, the Chiefs won. Yep, the Chiefs took it. So, alrighty. See what price is doing now. So that's about the same as it was doing 10 minutes ago. Absolutely. Yep. You can trade TradingView. I think, and you can do it with both. TJ has the right frame of mind. That's the one. Yeah, we had a bunch of blunders. Missed the extra point. We had that punt that hit the guy who was blocking in the back of the leg. Um, yeah, we killed ourselves. I mean, we didn't play great, to be honest with you. The offense really didn't show up the way we'd expected, but you got to give credit to the Chiefs, the defensive line. They were disrupting things all day. They made sure that Purdy didn't have much time to stand back and look for receivers. It kept him uncomfortable. So the defensive line for the Chiefs, they did their job. Trade minis with the funded. Okay, yeah, that's not a bad idea. So therefore, you keep your losses small on your personal funds, and if you do hit and strike a big one, you can get paid out quite well. You can take part of that, dump it into your personal fund so it grows more, and you know, obviously pay your bills and enjoy your life with the rest. I think that's what a lot of traders are doing. They're using prop firms to fund their own personal accounts. It is like a credit card if you a credit card or loan, however you want to see it. Yeah, those are very similar ways to grow a business with someone else's money. Just a credit card come with a really high interest rate, so you want to be careful. Mm, mm. Okay. Yep. You're right about that. All right, price. So now we're about 30 minutes or sorry, right around 20 minutes in at this price zone where it hasn't moved out of yet. So we'll let it continue to consolidate or to dance around and let us know where it's going. All right, Queen, take care. And for everyone else, we still have another hour and 20 minutes in today's session. All right, let me just take us all to the 4 hour for just a moment. I just want to know where we are. Try to figure out what we hope to see. All right, so based on where we are, and we have this fair value gap here, We saw when we broke out of external range liquidity and we traded back in to the fair value gap. We then consolidated for a couple candles, broke external range liquidity again. Immediately following, we then traded back into the range. So now what's interesting is not only did we trade through and a deep trade through, let's see where this candle, we still have 2 more hours. So basically when today's session is finished, let's see, even if we trade lower, let's see if we retrace and we ended up closing somewhere in this fair value gap. If we close in this fair value gap, then I'd be looking for some sort of bullish momentum tomorrow. If we close below, then I'll have to wait and look at overnight activity and just see how I think the price is going to play out and where I think it's going to go. But right now, even we see it rejecting back into the fair value gap. So let's just keep an eye on this level as we close out today and see where we land on the 4 hour. Back to the 5 minute. Adam Mancini. You know what? I think I do. I think a friend of mine turned me on to him because he's the guy who does the weekend newsletter, I think. And it seems like his levels are pretty good when he talks about taking levels or waiting for key levels for the week. I think that's the guy. Let me check my email to see. Yep. Yeah, he's the guy. Yeah, you're right, Fauci. He does seem to know which levels are the key levels that are going to hold. I get some email from him. Let me check my email real quick. I think he sends out an email every week. Yeah, he sends out like a generic kind of summary of what he's seeing every week. But if you pay for his subscription, then you actually get a detailed newsletter of his levels and what he is expecting. A friend of mine subscribes to his newsletter, so that's how I know how detailed it is. But he does have a free one he sends out that's a bit more general. All right, 245 now. Mm. All right, I'm go back to the 5 minutes. Not a lot to look at on the 15, not until we get back up into this range. Frank, it's generally you're just looking for similar levels. You expect those two indices to trade very similarly, so you're just looking for levels around the same time. All right, let's go to a lower time frame and see if we see anything there. All right, saw a slight high here on the 3 minute. Didn't make a new high like price structure, market structure. However, that's up at the midnight open. And we do see it making equal lows relatively. Let's go to the 1 minute, see if there's anything there to look at. All right, so we've done already the 50% retracement. We've done the 62% retracement. And that's just on this price leg. If we combine the two legs, which ended up sweeping the low, then we have done a 50% retracement now. We've also traded back to a fair value gap that failed. Now it looks like we're pushing lower. I know this is a 1 minute time frame, but let me go ahead and put the levels there. All right, so now all the lows have been swept. It's also macro time. No wonder. 250 now. Let's see now if it goes and gets this low at 936 and a quarter. And here on the 1 minute, we got a trade down below the fair value gap, but a close inside of. Let's see if we continue to get a push downwards. Remember the lows at 936, 17,936. Power hour coming. 10 more minutes. We'll be there. Oh, well. And why did it drop? All right, let's see what we can do here. Well, this is just theories, trading theories as to why it dropped. First was we reached 1.5 standard deviation, which was a new high, new all-time high for this index, right? When we made this all-time high, that then made the protected low down here. So this was our protected low. Okay, right here at 18,014. This level here was the previous day high. So this was Friday's high. It beat Friday's high, put in a new high up at 1.5 standard deviations, right? From there, we then had a retrace back down. back down to where the previous day high. So we're going to retrace back down to Friday's high. It started trading higher and it failed to make a new high. So it didn't make a new high. When you don't get a new high, then you start expecting for lows to be swept before it makes another attempt, if it wants to make another attempt, right? And in doing so, it created this, which was, I believe it was on the 5 minute. Okay, maybe not, maybe the 3 minute, or could be the 1 minute. Okay, let's go to the one. All right, here we go. So we got a breaker created here at the top. When it made that new high, it created a breaker. So it made a new high and then immediately swept lows, traded back up, failed to make a new high, went lower again. And this was all before lunch. It was all before lunch. So it kept making new lows all the way throughout. We came back from lunch. It traded back up. And this is in the blue, this is the same breaker that sent price down over here. It traded back up to it once, 2, 3, 4, 5 times. And it was unable to make a new high. And then it broke down and took out these lows backward in the previous day high. So Friday's high. It traded below Friday's high. And in doing so, on the 5 minute. So when it traded down here, this candle, which then swept the lows over here, created another breaker, another bearish breaker, where price traded above and then price traded below it. It didn't trade back, so there was no entry to sell out of here, but that's why price continued downwards, as it made a bearish breaker. Price continued, and it ended up settling down by the midnight open, which is, a nice area confluence where price likes to trade back to the midnight open throughout the day. And so that's what happened. It traded below as well, but that's why price started to fall, was because it reached a new high, which was external range liquidity. Following that, it traded back to internal range liquidity. It failed to make a new high, and so it started taking out lows. Now, since we know the market is manipulated, I can't tell you why the market makers wanted that to happen, but that's the way it is. Hopefully that helped. Yeah, you're right. It does have to come down at some point and just continue to buy every day. But whenever you see price make a new high, right, it's going to have some level of retracement. And how deep that's going to retrace, you're going to have to follow price to see how deep it retraces. But once it makes a new high, it's going to retrace. Yeah, let's see which time frame we're bullish. We're not bullish on the 5, that's for sure. Let's move up time frames and see when we are bullish again. Okay, we're not bullish on the 15. We are not bullish on the hour. Okay, we're still bullish on the 4 hour. Still bullish on the daily. All right, if we're going to return bullish on the lower time frames, the hourly will be the last one to switch over, and the hourly will switch over up here. So we're going to have to take over these highs if the hourly is going to switch back. Otherwise, we can do something like this. The hourly closes in 1 more minute. So we'll be here. We could then have an hourly candle close there. Right at 4 o'clock. We can have the end of the day, 5 o'clock, close down here, which then when it reopens tonight for the Asia session, we can have a retracement up here, and the hour can turn bullish down here at around, 18,000 or so, as opposed to having to wait till it gets to 18,100. But we'll see. We'll see how the rest of the day plays out and how price prints. But as of right now, to return bullish on the 1 hour, we got to get back up to the daily high or the all-time high. Yeah, one of the things I'm having to get more used to is that once you do reach outside, which like for this, a swing high, which is categorized by high with a lower high on both sides, lower high here and a lower high here. So this swing high, once price broke the swing high, then it needs to retrace to a fair value gap. Now there used to be a fair value gap right here. So this would have been enough if it wanted to. If it wanted to trade to here, we could have seen price do this. Once it reached this high, it could have traded to this place and then back up, right? But it didn't. It pushed right through that fair value gap and then below these lows. $7.80. All right. What was that? All right. The Silly Baba. Congrats, man. Glad you did it. Good job. All right. Let's get back down to a lower time frame. Okay. We are in power hour now. It is 3 o'clock. It is 3 o'clock now. Oh, what do I think it's going to close? Oh, that's a great question. It is an excellent question. Right now, on all the lower time frames, we just saw through the hour, it's showing bearish. So I want to first wait for another 7 or 8 minutes. Let's wait until we get to around 310, 315. Let's see where price is on each of the different time frames. We want to check market structure to ensure we're all aligned. We also want to go and check the other indices in the dollar and make sure that we're aligned there as well. So I'll go ahead and get started now and looking at all the different time frames to see where market structure is at the moment. And so 10 minutes from now, I should have a decent idea. Yeah, I just looked at market structure for all the lower time frames, and nothing really shifts until we get all the way back up here into 18110 area. Because of that, I think it's important that these lows get taken first. Let me just make sure I didn't misstate that. Okay, I think I did misspeak. So nope, that shift takes place here, not at this consolidation, right around the midnight open. All right, well, we're still talking another 70 or 80 points. Okay, so we'll see if we get a failure somewhere in here. So fail to make a new high and then drop, see if it can't sweep this low at 936. And then by sweeping that low, then you can look for it to then possibly turn the other direction and give us a big bullish candle. Okay, we're in our last final hour of trading today. Keep that in mind as you look for potential injuries and look to protect yourself as well. Yep. So if we can get a sweep here and then some bullish momentum, then we'd be looking at the 2022 model. So it'd be a sweep of this low and then bullish momentum out of it. Let's get rid of some of these lines so it's a little easier to see. Okay. %70 right now, almost 78 once it gets into the fair value gap. We want to see the same thing here. We saw external range liquidity here after this low was swept, right? Then we saw a pullback into internal range liquidity into the fair value gap. Tried to push out and failed to make a new low. So it's pulling back into the range. So let's see now if we get a push from here down, sweeping these two lows, these two swing lows. Okay, I'm just looking now at the opening 15 minutes of where each of the indices are. It's not surprising that so far S&P and NQ have been the strongest, even though Dow was the strongest all day. All right, so I was just taking a look here. I'm gonna show you guys where I'm at. So I was taking a look at the dollar and just looking at market structure and where things are. And once we got this high on Thursday, right, that really gave us this low as a protected low down at 103,957, which was traded below this morning at 2 o'clock and closed below. So that turned us back bearish for the hourly time frame on the dollar, right? And then and I did a measurement of this entire leg, which changed market structure. And I'm looking now at where we were tracing to. And if I look at where we were tracing to, we retraced almost to the tick to 70.8%. So I would expect for this rally here with the dollar to fail. So I'm expecting it to continue bearish, pushing down back into the fair value gap. It may close here today just because we're towards the end of the day. But I would expect for this swing low to be taken and for it to trade back down to 103,894. As you remember this morning, I was saying I wanted to see how the dollar reacted once it got to this. Let me remove this Fibonacci. Once it got back to the level of liquidity from last week at 104.268, I traded into it and rejected out back to a fair value gap. Then we see that it has pushed out of it with a nice bullish candle, but we'll see how this hour closes. My guess is that we're going to get something either closing below this level of 104.264 or somewhere back down in this fair value gap. And that'll close out today, and then we'll look at tomorrow and see how that develops. But I just wanted to show you that when I put the measurement down, we got up to 70.8 almost exactly. So it looks like a really nice retracement that would be deep enough for it not to want to go any higher. So if it does go higher than this, then we should probably expect for it to maybe switch back bullish. But we'll wait until that happens. For now, we're expecting it to remain bearish, which should push prices a little bit higher for the last hour here. So we'll see if that happens. Yep. But yeah, if you guys can see that we did take out lows on both NQ and S&P this afternoon. We swept the morning low from 9 o'clock both 9 o'clock hours. And then on the Dow, our 9 o'clock candle is still holding strong. The 10 o'clock low is holding strong as well. Even the 11 o'clock low has been protected so far. Okay. And we're going to switch back over. A plus entries in hindsight. Let me look and see. Hmm. No, I'm looking around. I don't see what would it be considered an A plus setup. I don't. I mean, there were some good setups today, but yeah, I wouldn't say there was definitely a bunch of A plus setups this morning. Um, Looking to see if there was one right here on the sale at the top here. I think it was in the 3 minute. Just give me a moment. Mm-mm. Yeah. Yeah, I would say this was probably the best setup that you could have found today. And it would have been on the 1 minute, right? Just before lunch. Knowing that we hit this high that was a key level, the 1.5 standard deviation, and then we saw price break down. This would have been your breaker, this one candle here on the 1135 candle. Right? Not only did it sell to lead you into lunch, but even it carried you after lunch to the sale at 115, which ultimately was the big breakdown in price. So that was the best setup that we could have hoped for today. And then that's what we ended up getting. And let me see who asked that question. Okay, yeah, that was Frank. Yeah, Frank. So that's probably the best setup we had today was on the 1 minute, a breaker that was just before lunch that held all the way through lunch and was ultimately what sent price reeling after lunch today. Two of them for sure. I guess the other one here on the 1 minute, Frank, probably this would have been basically ICT 2022 model. Here we have equal lows, 3 of them. We have a sweep of those, which also coincides with the midnight open. So the midnight open is a key level that we expect. If you're bullish for the day, you want to take longs below the midnight open. So this gave you one opportunity here with 2 candles. From there, it sent price pushing out, which created fair value gap here and a large one there, right? And so the ICT 2022 model would have been taking it out of this fair value gap down here. And you had a couple entries here. You had it break through, but still close above the midnight open. And remember, if you would have taken this long, your stop loss would have been below 2 candles. Would have been right here. And we see throughout all of this, you never really get a lot of heat. You never get more than half. Your stop loss was 16 points. It never goes more than 7 or 8 deep. But this would have been essentially the 2022 model, which was a sweep of liquidity, big push out, retrace back into the fair value gap, and then you go long for these equal highs or for some other, which in this case, it went for the previous day high, which was Friday. So Friday's high would have been the target there. And then you can see if you continued on, you took it to 1.5 standard deviation. So those would have been the 2. And this is normally what I do, Frank, at the end of the day, is you can clearly see this was a big move. And then you can clearly see that this one here was a big move. So then you go through all time frames and you try to find an entry for both of them, just so you can explain what happened and how you missed it and how you can catch it next time. So a breaker just before lunch that carried all the way through. You could have taken the short here or waited and taken the short over here. So one of these 2 spaces would have been your short. And on the long, it gave you multiple entries as well. You could have took it here, gave you another entry, and another entry. So on both of them, it would have tested your patience, whether you were, if you got in on the first option, whether you were willing to wait 30, 45 minutes while it just traded in the same range without leaving. And then eventually it took off. And then over here, it sold out of here, but it didn't really leave the range. It stayed in the range for the entire lunch, retraced back up to it, and then sold off. So yeah, both would have tested your patience and really your belief in your model. Yep, we got CPI tomorrow morning. We sure do. All right, Frank. So those will be the 2 big ones for the day. I know originally I was just talking about the breaker here at lunch, but in the morning, yeah, it was the 2022 model that was given right at the opening bell. I'm not big at trading the first 30 minutes, so this first retrace back down at 940 would have been something I wouldn't have really been interested in, just because the opening range can be large, and I don't have enough experience back testing the opening range. But I do see every day this confluence with the midnight open. So when you see price trade to the midnight open, you always want to take a position and decide whether you think it's going to hold or let it go. So hope that helps, Frank. All right, let's get back to where we are. It's 3:30, so we got another half hour of trading today. Looks like that low was never swept. We've just kind of been building slowly out of it. We got CPI red folder. Yeah, tomorrow at 8:30. Core CPI month over month, CPI month over month, CPI year over year. Forecast is 2.9%. All right, so that must mean they're forecasting month over month of 0.2, and they're forecasting this to go down 0.5. So this time last year, January was 0.7 for 1 month. Holy cow. Let's just see if that's true. It's a February of 23. Oh, it's only 0.5. That's weird. Oh, I see. Negative 0.1. Wait a minute. We're only supposed to improve by 0.3 over the same period last month. Yeah, I don't get it. Do not understand. Maybe my math is incorrect. We'll see. Anyway, they're forecasting year over year to be 2.9%. I'm sure that's going to be a huge accomplishment for the Fed, since they've always talked about 3% annual inflation as the number that they're trying to consistently meet. If that's where we land, this is going to be a big celebration, and I'm sure immediately afterwards people are going to start asking, when will we start seeing rates go down? So we'll see. But that's what we have tomorrow morning at 8:30. So when we get on at 9:15, that's already taken care of. It should already be in the prices. We should have seen a big spike one of the directions just before, and we'll proceed from there. Let's see. Just get a big dump. That's true, because that might push the dollar into a new high. We'll see. Not an all-time high, but a new high, like locally, to one of the swing highs. Yeah, no, they're just saying from a year ago. So not like if you're comparing from 3 years ago. And that's the thing, because price is never going back to where it was. 2021, 2020, those levels of prices, we're never seeing those again. Look at it on the 5 minute for that consolidation we're looking at now. Okay, we'll see if it gets there at 988, 17,988. Fauci, I hear you. I definitely understand where you're at. I'll see you tomorrow. Take care. Okay, 3:40, another 10 minutes. We'll see if that last macro that runs provides a setup. Let's see where we are. Okay, maybe it'll return into this fair value gap potentially up at around 968, 969. Let's check some other time frames. 2 minute. Okay. It's very similar. Fair value gap. 3 minute. Same. Okay. All right. 4 minute is where we don't have. Okay. Well, let's hang out on the 3 minute then, since we do have a fair value gap there. Let's see if we trade into it. Oh, actually on the 3 minute, it's not confirmed. We need to wait for another minute for the candle to close. But on the 2, it is confirmed. And there it is. Same on the 1 minute. See if once this 3 minute is confirmed, we also get a retrace back into the same fair value gap, but this time on the 3 minute. Look like we might get it, since it looks like it want to close up near where the fair value gap is. So immediately when the next candle opens, it can trade right into it. There it is. Back down to the 1 minute. All right. Okay. So we invalidated a bearish fair value gap, dropped in a bullish one, swept these equal highs. All right, now I believe it's going for 988 level. Let's see what happens when we get there, whether the price wants to turn around or continue forward. Hmm. And another test of the fair value gap here on the 5 minute, and so far rejecting out. Another 30 seconds before this candle closes. But, it's not looking really strong right now. And then we have the macro starting as soon as this candle closes in 20 seconds. Let me drop back down to the 1 minute and let's watch it from there. Yeah, it's too far really to break structure here before we get to like 1820, 18020. So you're talking about another 40 or 50 points, and then you break structure, and then it's 4 o'clock. So it's not a lot of time to not only take the range, but then look for something further. Fair value gap on the 15 has been holding. I don't see a bullish fair value gap, but let me check. Okay, I see now. 962 to 952. So why is it gone? Oh, because it closed below. That's why. All right, I see. Okay. Doesn't look like we're going to get a market structure shift or any of those things during this time period. Um, if anything, it'll run up to the midnight open, which even if it does that, it's not like it gave us an entry to facilitate it. Mm, looks like a declining range is what we're getting. We're just going to get a smaller time range until time runs out. So if you have any questions, any other questions or comments, go ahead and throw that in the chat now. So because I don't think we're going to get the price action we're looking for to actually make a move and do anything about it. In fact, let me get rid of this trend line. It doesn't matter. even this high right here doesn't matter. This high doesn't shift market structure. I mean, if you look at these candles, without anything in between them making a swing high or low, then our protected high is up here. So until we get up here, we're bearish. Even on a lower time frame, even if you go down to 1 minute, it's exactly the same. Right? This push down here didn't make a new low. The low previously was here. So it starts up here and pushes all the way down. So again, your protected high is up here at 18.029, 1830, 18.030. And we're still down here trading at 966 with a low of 936. So we got a 100-point range here. In order to switch market structure, we're going to have to get all the way back up to the midpoint of this breaker. And yeah, I don't see it. Let's see what else we got. All right, Trader Boy, welcome. Glad to have you. Yeah, so what happened was this afternoon we got bearish big time on the hour and below. So everything from the hour and below hit the bearish mark. We're still, let's see, yeah, we're still bullish. We're still bullish on the 4-hour, although the one with the highest wick is not the highest candle body. So that's generally a sign that you can see price starting to weaken because of that big rejection that's there. So I can understand why you say the higher time frames are looking bearish, but as of right now, market structure is still bullish from the 4-hour and up. But with all the smaller time frames bearish, it's hard to go long, even though that's what your higher time frame is saying. Which is why I was hoping that we get a sweep of a low, so then we could then go and sweep a high and get back bullish. But without the sweep of the low to get back bullish, you need to get all the way up here, and we're just going to run out of time. It's just not going to happen before we get to 4 o'clock today. But it's fine. So if you're trading on after hours, you come back during the Asia session, and you're looking at price action. Just look and see whether when we reopen at 1800, whether we go for these lows or go for this high up at 18,030. From 215, you can see price hasn't done much at all. You go from that high down to here. I try to make an ugly color, but it's really hard. But you can see nothing has happened in the last 2.5 hours. Or sorry, not 2.5 hours, hour and a half. Similar to what we had this morning here. Just keep hitting high ends of these extremes. Now it's coming back down. All right, we had that one. And if you go into where we stood earlier this morning, over here, we had something similar. Till we broke out, this is what we were doing. Right, so it was all the same till we finally broke out. Right, you had a big breakout, and then you essentially had a reversal back down, and then same thing at the end of the day that we had at the start of the day. And this, if you look at it carefully, let's see if we can't see this on a higher time frame. Yeah, very much looks like a market make a sell model. Very much so. I attempted a long up here when we had a breaker. We had a breakers form on a lower time frame. I attempted a long, it failed, and then price just completely ran away. What is a protected? Oh, so a protected low is in market structure. The protected low is what keeps market structure the same. So if we're bullish and you have a protected low, you're saying this low is what keeps us bullish. If this bullish is violated and it trades below and closes below, then we're no longer bullish. We flip over to bearish. And when you flip over to bearish, now you have a protected high. I'll show you kind of what I'm talking about. So let's see. Let's get back to where we were. We just all right, so we'll start here. So this was our low. When we broke through, this became our low, and protected high became this line up here. And we kept trading below. Let's hang on. Okay, nope, sorry. All right. So when we traded down here, previously this was the protected low. This one candle was the protected low. This turned us back bearish. When we traded down here, made a new low, which was lower than this low. That made, now we're bearish. That made this a protected high. So as long as this high isn't violated, we're bearish. And we kept on going, kept going until right here, that high was violated. And this candle closed above, which now turned it back to being bullish. So let's delete this, return bullish. And once we're bullish, that made this the protected low. And as long as we don't violate this low, we're bullish. Right? So even though we're retracing down here, we're still bullish. It doesn't matter. So during this morning's consolidation, we were bullish the whole time. It just wasn't moving anywhere. It would go up, come back down, go up, come back down. It just kept retracing, but we were bullish the entire time. So when it finally did push through, we were already bullish because down here was our protected low and it never got violated. Right? It was made here at the open yesterday at 1800 and it wasn't violated. So we were bullish the entire time. Right? So I'll delete that. We bought up. Let's get rid of this. Right? When this candle here made a new high, that then shifted our protected low from, oops. Okay. So when this candle broke through bullish here, all right, that made this protected low now shifts up. It's now this one. All right. And then we had another shift up. So this one then made this the protected low because this low made this high. This was the leg. So now as long as we stay above here, we're still bullish. And look at what, and this is what happened after lunch. And so this is when the shift was made. And so when you say a protected low, we had a protected low and then this happened. When this happened and it closed, now I'm going between this low and this new low that was made, and I'm going to find my high. And now that's going to be protected. So now this becomes the protected high and we're buying and we're selling off. We retrace, we make another low and close. Now between, let's see, this low and what was the last one? Okay, yep. So this high is what made this low. When now we made this low, is between this low and this one. Now the protected high slides down. So it slides to here. And that's where we are now. This is the protected high. So we traded down, made a new low and started consolidating. But even though it's trading up, down, it even can make a new high. We still don't switch back bullish until this protected high is taken. And that's why we're still bearish. We're still sitting here. And that's also, if you can see, this bearish fair value gap is pushing price. But this is just following market structure at this time frame. And this happens on every time frame. So sometime you'll say, oh, okay, the 5 minute is bearish. The 2 minute is bullish. And you just have to wait for all the time frames to catch up. So that's what that means, Eddie. Yeah, Eddie. So some people just trade market structure. They trade just like this. When price makes a new low, they then see this fair value gap as being something they can use because this is the protected high. So you can enter a trade, a short here, put your stop loss up at this protected high, because if it passed the protected high, it'll stop you out of your trade and it flipped back bullish. So you expect prices to continue and go higher. All right. And this is also why when we were sitting here consolidating, I'm like, okay, so nothing's going to happen because we're not going to flip back bullish until we get all the way up here. And by the time we get there, time will have run out. And that's why what I wanted to see was I wanted to see this low broken, because if we had, let's say we traded from here to here, and then we did this, let's say we did that. Now we would have a new low. So between this new low and the old low, then the protected high would shift down and it would go there. And then what if we did this? We traded back up and then we did that. Now the protected high shifts here. So the next move could then be here. And now you've shift back bullish, but you didn't need to get all the way up here. You did it down here, but you only did it down here because you were able to make lower lows, which brought the protected high down closer to where you are. Esh, how's it going, Esh? All right, we're 5 minutes into the next hour. So that ends our trading today. If there are more questions, I'll answer those. Otherwise, I'm going to shut it down for the day. I'll give you 30 seconds. Quickly ask another question. Otherwise, I'll assume there are no questions. All right, Khaled, take care, man. I'll see you tomorrow. On this drawing, was there an entry? Okay, so not necessarily, Frank, unless you were looking for this, right? And you said, okay, well, let me go short until we get here. So then you would have been looking for something up here to go down. But what you probably would have most likely wanted to do was here. This would be the entry. This would be the leg you'd be looking for an entry, because this would be the ICT 2022 model. So you would have, this was a previous low. You'd have a sweep of the low, and then you'd have momentum pushing up, and you're going to look for something here. You're going to look for a bullish fair value gap. And then that will take you from here back down and then out. And your entry would have been right here. That would have been your entry. And if that wasn't what you found, then you would also be looking for, let's say, potentially maybe somewhere in here. Would have been a breaker of some kind. You know, let's shift this up some. Right? Because the breaker would have been a low to a high, to a lower low, to a higher high. Okay, that's too difficult to see. But anyway, so you would have had potentially a breaker in here that it would have been returning to the breaker as well as the fair value gap inside. Oops. Why can't I redraw this somewhere else? Okay, got it. So for the unicorn model, you would look for the breaker with the fair value gap inside on this new leg that broke a previous leg of structure, turned us back bullish, retrace back in, find the breaker with the fair value gap inside, and you enter somewhere in there. Anywhere in here would have been your entry. What am I expecting tomorrow? Okay, well, let's take a look. Let's see what we got. All right, so we want to see a higher time frame here. Okay, so yeah, I don't need any of these. Not sure why they're still there. All right, so what you see now, today's daily candle is going to be a big pullback candle, which is fine, right? Because it's going to create this fair value gap. And let's remember, today we hit another all-time high. So whenever you hit an all-time high, you already know your external liquidity. You're outside of the most recent range. So after external range liquidity is hit, then you want to hit internal range. So if we make a fair value gap here and we leave this open, I did mention this earlier today. I said, let's see where the daily ends and how large of a fair value gap we have, because hitting external range liquidity, we now want to hit internal range before continuing. So this is the fair value gap to hit before going. Now, if this candle closes down here, then we won't have a fair value gap. So we're going to have to do this tomorrow. And if that's not large enough, then it's going to be here. So that's what we're looking at. We're looking at moving into internal range liquidity tomorrow, tapping into a level that then gives price the opportunity to go back external. So we gotta tap in internal first. I was hoping we get a larger fair value gap based on the closure, but it looks like we're pushing lower towards the end of the day. So we'll see. We'll see where everything lands. Let's go down to a smaller time frame. Right. And you can see more of that here. Like here was a high, price bought up, took out external range liquidity, returned to internal, hit a fair value gap. Didn't quite take a high, came back to the internal, took external range liquidity. As soon as it did, it made a fair value gap, returned internal range. As soon as that happened, bought up again, took that high, so now external range. After that, back in, internal range. That was done, bought up, took out this high, external range again. All right. Then this candle. This used to be a fair value gap. Traded back into internal range. What happens after that? Traded above this high. So external range again. As soon as that was done, back to internal range. All right. Eventually this one didn't hold. So now it's going to be the next one. It's either going to be this one or this one before we return to external. And that's if we return external. We could continue pushing lower. And if we continue pushing lower and get down here, then you're talking about this becomes external range. And then you're going to have a bearish fair value gap. You trade back up, internal range, back down to external range. And that's what we'll be looking at. But right now we're still bullish. So we're looking at either this little sliver that's right here or this larger one tomorrow as a range to trade to. And then from there, when you see price touch it, go to your smaller time frames, and then you're looking for some sort of energy that's pushing out to give you a bullish entry. That's what we'll be looking for tomorrow. All right, cool, calm. Hopefully that got you everything you needed. And I know there's a handful of people still in here, but I don't see any additional questions. Going once. Going twice. All right, I've given you an extra 15 minutes. It looks like the questions have stopped. So thank you all for joining. Thanks for being here. I know most people have already left. So just want to say, yeah, it's been good energy today. It's good first day of our week. Good start. We have another day coming tomorrow. CPI is in early at 8:30. So by the time we get on, CPI has already occurred. We're going to be ready to trade, looking for opportunities. And on your way out, hit the like button. If you're brand new, it's your first go at it, or you like what you saw, hit the subscribe button, and we'll do it again tomorrow. Cheers, everyone. Take care.